Welcome to the Kendall Report, everyone. Hey, get the popcorn out, huh? It was quite the day. So much to cover tonight, and I've just been, I've got an entire list of things to talk about, and I don't know that we have 3 hours to talk about it. And yes, the database is under 22, so we'll talk about that as well. Bear with me 1 second here. Yeah, so where to start? So the headline here tonight is the regional bank situation, is this a systemic issue? And I'll just give him a shout out. Dr. Jim Baker called me. He's been around the banking system a long time. We had a conversation about 2 hours ago, and we've been talking about some things in the background. And if you go back to I believe, to the Twitter Spaces that Jim and I did. We posted it on our YouTube channel. We were talking about a number of things, but the question is if this is this really a systemic issue, or is it just a crypto situation with the SVB Financial? I'm going to show you a couple of things on that as well. I have to tell you, my head's kind of spinning tonight, and when the market started to come apart earlier today, I thought it was interesting because we're really looking at some, the market just started coming apart around, I think when we traded down below S2, once we did that today, we printed, let me just rewind. We started off by rallying all the way to R2. Like I said, it was S1, R2, the day was going perfect, right? Then it started to unravel, and then we took out, when we took out S1, then we got to S2, S3. I saw some folks on Twitter going, hey, are we going to print STX? And the answer was yes. And actually, we got an STX buy signal. So I'm trying to put a very complex situation together here, and I will I'll try to put all this together. I'm going to need the weekend to really put a handle on whether this situation is systemic or not. My inkling I'm leaning towards it is not. I'm going to bring up the KRX, and we're going to go through a bunch of this stuff. But it was a very interesting day. And what we've really done, which is even more interesting, all we did was go back to where we've already been, right? So it's not like the equity markets collapsed to nowhere. It was actually fairly orderly at the end of the day. I mean, we were down about 2%. We bounced back a little bit. The S&P down 185, NASDAQ down 205, Russell down 281. But we'll get into. I'll get into this. I'll get into flow. I'm just sitting here. I'm serious. Just trying to put all these things together. I was looking at, and it's very confusing. I told Jim a little while ago, if you're watching, you'll get a kick out of this. I said I'd rather come live tomorrow than tonight because there's just so much uncertainty that's out here. What's interesting is it does look like a lot of these things are, I mean, I'm looking here at the futures as we speak, and we're printing down 2650. So market's getting into a little bit of a panic, to say the least. And the good news is, from an index standpoint, we have no long positions. We've been out of any positions, and the database on a short-term level has been just liquidating ongoing. And when I go through the database tonight, I'll talk a bit about what my expectations are for the intermediate database and whether this whole situation just broke the market. And I'll try to, you have to pay attention when these type of situations happen. You can't just blow them off, because these are the type of things. This is something that nobody was talking about, okay? Everybody, in general, because now they're going, okay, this is all because of the interest rates going up so fast, and this, it's not. This was specifically to the probably to the crypto situation with the Silicon Valley Bank, and these guys, they've been cowboys since they've been around. And I'll show you some stuff here in a few minutes that I was able to find. But I really, like I said, I'm going to kind of hold back. Sunday night I will go through. I'm not copying out. I'm just saying I'll go through the technicals because that's important right now. But I think as far as putting the handle on this thing, kind of came out of nowhere. I'm not going to, it'd be irresponsible for me to be able to go through and really call this thing out, whether it's super systemic or not, and what the impact of today's action was. Obviously, once again, crypto got hammered again. We saw, the markets decline down below some of the levels I've been talking about. So, like I said, just a lot to talk about. So I'll try to get some flow here. I would say if we've got unemployment coming out in the morning, if it were to miss, all of a sudden maybe the unemployment report could save the market. And if it were to miss, so far, every estimate that I was able to look around the street and see was looking for way over 200,000 jobs. Everybody was having the job market hot. So we know right now that good news is bad news, right? So that means the Fed's going to continue to raise the rates. And I made this comment last night, and I'll just try to circle back here to that, is that I said, at what point in time did all this good employment news end up to be bullish, not bearish? And, you know, and like I said, everybody's working, jobs are being created like this. Where do you come up with the negative other than the Fed's trying to raise rates, and maybe this is the result of this, where we see the regional banks getting hit. But what I saw today intraday was the algos got this story. When all the algorithmic traders get out there and they get a story, they can drive that narrative. I mean, they were just beating on this thing. Looking at the E-minis and the order book today, there was just a solid selling. And there was a time we printed down to, I think, around 39.19, something like that. The market bounced. We bounced back to into the 30 handle, right? And it looked like, okay, that was it. They're going to stabilize this thing, firm it up, maybe some short covering into the close. That didn't happen. They literally dumped it and just went straight down to new lows, and we printed down to basically 39 even handle. And here we are right now, 38.92, down 27 right now on the futures. And they kind of just took, since I came live, they dumped once again. So we're seeing a lot of emotion starting to flow, and I think it just sets up for a crazy opening in the morning. So I'm just trying to put some sense on this, folks. So I think the best thing I could do at the moment, I think it'll come in the flow, is to get into the technical flow. We'll go through the database and talk about that. And like I said, employment numbers expected to be around 200 tomorrow, unchanged on unemployment. I think that, you know, that's going to be it. But what we're going to do is I'm going to go through the database, and then I think before, I'll go ahead and I'm going to bring up the SVB Financial. I want to show you a couple things. We'll start off there since that was the real big trigger today. So let's go ahead and let's get into the database and take a look there and see what we can uncover. All right, this is the weekly. I'll just cover this real quick. So the weekly is at 68.92. So we're probably going to see a liquidation, whether it's material or not. It's going to be tough to get it below 42%, but we could see a material hit. We won't know that until after Friday's close, when it runs, and see how we set up for tomorrow. If we rebound, okay, I'll just put this in here. If we rebound tomorrow and we're not at a 38 handle, I mentioned last night, if we get this kind of action I'm going to show you on the daily, we're probably going to see 38.50. I was talking about that last night, and there's some other things that have happened after today's action that have shown up, not out of nowhere, but have shown up that are going to affect some of the analysis as well. But the bottom line is we're likely to see some pretty good selling coming here on the intermediate. But if we rebounded back, and let's say we closed 39.70, let's say it rebounded back. That's not unrealistic with the kind of volatility we have out there. If we close over 39.70 plus, then the impact to the intermediate database is going to be minimal from that standpoint. Let's go ahead and let's click over to the daily here, just so you can get a feel for that. So I talked about this. We're at 1907. We had 2,664 sell signals for tomorrow's opening. That pushes us down to 1907 long. And we only have one position left, transportation left. I'll show you here in a minute. But we had 115 buys. So let's go to full screen. And you'll see down below here, there's actually just one position long. Transportation is still long here at 13.94. And I think that that's the last of it. So we have one position on the sectors, groups. We're down to only 23% of the industry groups and down to 19 on here. I'm going to go back to the weekly, to the full report again. I thought this was interesting because one of the things that was actually doing pretty good is transportation has been good. If we look at the sectors on the intermediate, so we have 9 sectors long here on intermediate, and then on the groups we're 64% long, 68%, basically 69% on the individual symbols. So there's still a lot of traction on the intermediate. And if you look at the indexes here, they're all up 5, 7. There's only 2 indexes down. Conglomerates got hit down 8%, but everything else is somewhat positive. We got transportation up 9, and that's a pretty good number there from that standpoint. And the daily transportation was up some pretty big numbers prior to this last mode. So I would have to do a 3-hour live stream, I think, to do any justice to what happened today. And I don't believe I have the time tomorrow to do anything long. I may actually just come up on screen here for a second. I may come up live if we're melting down tomorrow. I'll try to come up at some stage. I've got a crazy busy schedule for the end of the week, so I'll try to get to that as far as that goes. So, but the way everything's set up, we're full liquidation mode on the daily database. We could go a sub into single digits. Typically, we'll go down to 9 or 8%, but basically all the damage is done here. But don't own anything. We're down to if I just flip over here to the daily again, we're down to 3,000 stocks of 15,800. So basically everything's out for the most part. And I bet if you looked at what's in there, you'll probably see some interesting things. So we've got some other things to discuss tonight as far as things go on the markets, because there is just a ton of things that happened today. And what was the most interesting is that the long end of the curve was getting hit. Actually, everything got hit. We saw a pretty good hit on interest rates, which I'll go here through in a minute. So let's go ahead and let's go ahead to these some of these other stocks here, and I'll just put this. I'll start with the S&P, but we'll cover some of these other indexes here real quick. All right, so we're going to start off with the most famous stock of the day, SVB Financial Group, and this is a monthly, and you can see it's just a giant V. It looks like everything crypto, or let's say it looks like just some of these stocks are just shoot up and down. And I'm going to show you something because this was interesting. This next chart I'm showing you, this is the PortfolioXpert. We actually bought this stock over here at the 182, and we sold out of it at, if I get the right number here, we sold out of it at 724 and haven't owned it since. This little green shows where we bought and sold here. So this stock's, and now it's down here into the one handle, right? So it's just coming down. And when I saw this, it reminded me a lot of really almost like Enron back in the day. So we've just got another disaster run by, I was looking at some of the stories. I haven't followed this this group at all before, and I just thought it was interesting when it comes in. You can see, in fact, if we go over to the weekly chart here real quick, there's downward projections. This is suggesting that we're going down to, this is always funny when this happens, because this is actually projecting the stock to zero. And so I don't know, they're talking about raising some money for this thing. Who's going to put money in this, right? Raise your hand if you're going to get in on a secondary stock offering for $1.5 billion. These guys are done, I would think. This bank is done. Question is, are the other banks done? And the next thing I'm going to cover here is we'll go into the, let's just take a look at the KRX, because this is also, I think, worth taking a look at. And this has been the case. Do my best to cover this, folks. Let's make this full screen. Is we look at this index, it's been doing the same thing everything else has. We're back and forth, back and forth. Now we are getting some fib targets to the downside. The minimum target here is for, let me get these numbers up here. Minimum target is 104, 97, 93 on this index. So there could be some more stress. The algos are suggesting there's more downside. We're trading right around the 200. And the 200 average here is right now at, get that number for you. 200 is 106.43. That's pretty much in line with that fib target 1. So it looks to me there's going to be more pressure. Certainly no one's going to be running in to buy these things. There's not a lot of, there are probably some bargains in here, but this is not an area that I think you want to be I don't think you want to be too aggressive with any of these stocks, but I just wanted to get a perspective. So we basically have been trading above, this is a weekly, a 200-week moving average, and we've come back to it here. Last trade 116, the 200 is 106. So we're still above there. And then that fib target 1 right now is roughly 104.75. So there's some alignment there from that standpoint. So I will promise you that on Sunday night, I will do a bunch of research. We'll see what kind of action we get tomorrow. We'll see if this was a one-off issue. I have a tendency to think that it probably is. We've traded, all of these markets have been trading in these ranges. I went through the whole range scenario last night on the S&P, and I'll go through that next. So let's just go ahead and dig into the S&P and get into that analysis. So the S&P is, this is the hourly chart. Once again, it seems like this is a scenario every night when I come live. It looks like we're going to improve a little bit coming into London, but right now this number is so big, this 10-period moving average, 39.47. It is declining right now about 8 handles per hour. So somewhere around 25 to 35 is going to be resistance. The fact that these indicators are being forecast to turn up, all that's happening is that it's bleeding off the downward pressure. So there's still a lot of pressure. We'll have to see how this thing sets up in the morning. I would watch it. Those of you that have the indicators, watch how these algos are looking as we come in toward the opening in the morning. And that same scenario, I've been talking about this for a while. Same thing happened this morning. We continue to see, if you're trading up into the U.S. Open, there's what I call a scalp trade. There's a reaction trade, and And then, so we'll see if we're trading up, look for a reaction trade down. If we're trading down, look for that reaction trade up. But plan on lots of volatility. I think crazy volatility. Like I said, if I can find some time toward the end of the session tomorrow, I may come up live. I won't guarantee it. Just watch Twitter, and that'll be the place to go and to find out if I'm going to be live here or not. Let's go ahead and just take a look at the. Let's go ahead and look at the daily. Now this is where it starts to get interesting. We got yesterday was a huge outside reversal, and we got some new downward targets going here right now, and you'll see the target is 38.20. And I'll go through, I'll probably set up, we'll do a weekly, but you can see clearly we got an STX buy signal. Typically, that means we get sideways to up for 1 to 2 days. We'll probably come back into the pattern, maybe head back toward this 10-period moving average. It is being forecasted that it's going to improve. I know that sounds crazy after today, but it is suggesting that we will come back and potentially challenge that level, 39.85. So what I'm looking at here is just really just expecting the market to come back into the range. However, if like I said, we don't have any long positions on the index right now. Our short-term trades are washed out. We're only 2 out of 10 symbols are even long right now as of the morning, so we don't own anything short-term. Intermediate term, a lot of those stocks were bought coming out of the October lows, November and December. So a bunch of those stocks still have lots of profits, maybe giving back some, but there's not. Only recently have we got some new trades on, and they're typically going to hold around 200 market days. So we're not going to get blown out of these very easily. And like I said, if you look at, and I went through the whole box trade, we'll go to the weekly next here in a minute. But if you look at everything that is out there from the standpoint of the patterns are out there, we're still within that pattern. We traded below the 200-day moving average, so we're back under there. The interesting part is the 200-day algo is suggesting that we're probably going to hold around there as well. So let's take a look, and let's go to the weekly. So weekly setting up interesting, folks, because we potentially could get a downward reversal. I've been talking about these Fibonacci targets that put us to the 200-week moving average. That number right now is Fib target 1 is 38.17. We just looked at the daily, 38.20. As I mentioned, if we did get this selling coming into the database, which we got, that we're probably going to see a 30 down into 38.50 handle. And I think everything's going to be centered on the markets actually trying to whether they're going to be able to bounce tomorrow or not. Okay, I'm just going to flip over here. I'm going to flip over here to the daily just so we can bring up the market grid here. And like I said, yesterday we got STX buy signal. We got, right now we've got the low 38.92. Last is 39.03. So we're trying to bounce a little bit off of that low. And now if we look at the market grid, 38.81 is S2. S1 was 39.01, so we've taken that out. R1, 39.36. R2, 39.56. We could see a bounce out of here. We've been just short of S2. We could see a little bit of a bounce here, but these are tough markets. And like I said, I would look for, because of the STX buy signal for it, to try to come back in and possibly, like I said, get into maybe an R1, R2 range. And right at that 36 number, that's about where we rallied back and failed yesterday. And yesterday meaning today on Thursday. So it's going to get interesting. Like I said, we got major news coming out. There's going to be a lot to digest. I think tomorrow's just going to be get that. And and I see maybe somebody talking about we might not get the 50 basis point hike. Who knows? And like I've been saying, I still have the terminal rate around 5.25. Now, this is actually classic. You saw a lot of people coming out talking about 6.25. It's just going to keep going up forever. And I think those are the kind of rhetoric you start to hear when the market's actually getting pretty close to a low. I still think if we look at this pattern we've been in, and I went through these things a couple times, I'll save it for Sunday night, is I really think we're just still in this massive trading range, and we're trading down toward the lower end of the range. And I'm still not convinced unless we can determine that this banking situation is systemic. And I don't think it is. I really don't. I know a lot of the regional banks have exposure to commercial real estate. So all of these bad stories are starting to merge, and that's what it just seems to me, that there's a frenzy going on the negative side again. I did not look at this earlier, okay? So I'm just going to take a quick glance here. I'm going to put the VIX. The VIX shot up a little bit. After being down, 18 handle. Now we're at 21. I do have some Fibonacci targets here. Let me go full screen. You can see these Fibonacci targets for the VIX is let's see here, 23, 68, 25, 79, 25, 2709, and that puts us up around the 200-day moving average as well, which is 2421. So that would be, and that's about where we peaked last time. You can see back here on February 22nd, we were at 2477. If I look at what the price was, that was the 200-day back on the 22nd. We got right to 2363. So we'll see how this thing acts here, and possibly let's do one thing. Let's see if we can put let's put the VIX up here. Now this is a weekly VIX. This is kind of an interesting weekly VIX. Looks like it wants to continue to increase, so maybe we're going to see more work on the downside here. Let's flip it over to a daily here. Daily, yeah, interesting. Daily says that this is it, that we're going to come back in and stabilize here for a couple of days. That's just from the algos right now, looking at the VIX. Yeah, I think I just saw somebody mention about the rollover on the ES. I think we are seeing some of the rollovers come in here. That's why we're seeing these numbers that we're seeing here. If I come up here and do a ESH, yeah, if we go to one, yeah, so this is the June contract that we're looking at here, folks. So there's a rollover. So just another unexpected as we come into Friday. So to throw off the analysis a little bit here. But all of these numbers, let's come back on. All of this stuff is, there are quite a few indications that we could see 38.50, 38.20. We got the liquidation of the database. We got all of this stuff pointing to lower prices here, and certainly plenty of emotion, and maybe it gets really, really crazy. I still am anxious to see how the intermediate database comes through this. We've had a lot of success this year on the portfolios that we've run. We've run quite a few portfolios every night. And I can tell you that I saw just the other day, the average was up about 6.5%. And maybe today that backed up a little bit, but still positive on the year. But certainly anything that has a different time series, if you're doing a short-term time series, you're seeing some cash raise, and possibly we'll see some cash raise on Friday when we get those things. So those of you institutional folks that are watching, we could see some liquidation of those positions as we come into Monday's opening. So like I said, I'll cover that on Sunday night, and we should have everything. So let's get into the NASDAQ and continue on. It's always interesting as we look at NASDAQ. The algos are suggesting a recovery from here. And even though we got this new fib target down here, the fib target 1 is 11,526. And if we can't get it below yesterday's low, I believe there's a rollover has occurred here. This is the nearest contract, so evidently there's some premium coming in here, but we have to deal with these continuous charts anyway. So like I said, Sunday night we'll have everything together. Just a lot going on tonight, and I had just a crazy day in meetings all day while all this was going on. But here's the upward projections here on the NASDAQ, which are still valid, by the way. This 200 period moving average, this is daily, 200 is coming in here right now at 11,932. So we stay above that. Maybe we get some recovery. The algos are all pointing that we should start to recover and head back toward to get above the 10 period moving average, 12,130. And like I said, the last trade here, this is a daily chart. Last trade here is 12,082. I've been talking about these secondary stocks and getting rotation. Well, the Russell got hammered yesterday. We were down, I think, get the exact number here. We're down 2.81% yesterday. Some follow through here on the futures tonight. We've got new Fibonacci targets down, but they're really tight. And like I said, it's interesting that all the algos are suggesting that we've got a potential turnaround and maybe a rally back into moving averages. And the key level on the upside here on the Russell would be quite a ways up. You're looking at the fib target 1 we hit. Now we hit fib target 2 of the original, and we also have this value right here at 1808. I was talking about this 18. Let me get the exact number here. 1840. So we were able to print well below that. 1804 was the other number that we were looking at. So we get down to 11 so far overnight. So we're pretty close to getting that. The previous numbers, though, were 1839, 1817, and then there's a new calc that came out today on this market action. But all the algos, at least on PPM1, are suggesting we're going to flatten out. So it's trying to tell us that the market's going to rally back toward that 10-day moving average, which, as I mentioned just a minute ago, let me find that. The 10-day is right at the 1885. It's dropping a little bit, so we'll probably see 1870, 1885 is going to be the range where we're going to get on that level. So just last night, I was talking about the 10-year that we could start to see the market roll down into the 380 level, and we saw 389.4. We're almost down to fib target. I was talking about the 21 period moving average. That's at right now 3.75. And the algos are suggesting that we're going to soften even more. So the higher rate syndrome doesn't appear to be the case on the back end of the curve. And we did see, let me flop over to TradeStation here for just a second. And, you know, we did see almost everything come down pretty good yesterday from the standpoint of everything pulled back from the 13-week, the 2-year, everything was coming back in yesterday. And it looks like it's going to continue. The algos are suggesting more softness in yields. Let's go over to the futures. And this, yeah, see, this was what I was talking about, this breakout, and the number to watch at 112.19. We went to 112.05 is last trade here, and that 112.20 and a half is the pivot. And look what's happened all of a sudden. The 40 period moving average is already starting to flatten out. It looks like that'll be resistance up just above that pivot, but we're likely to see more upside here, which means more downside on yield, which is somewhat counterintuitive maybe in what you might be thinking, that if the Fed's going to raise rates to 6.2, which they are, I don't believe they will. I do still look, as I mentioned earlier, I still look at the terminal rates to be right around 5.2, maybe 5.5. And I don't think it matters whether they do 0.25 on the 21st, 22nd of this month or 0.5. I think they'll probably stick with the 0.25. I don't think they'll push the envelope. We'll see what happens. I mean, Powell stuck with his story pretty strong and over the last couple of days coming into this. And I'm sure, like I said, from my viewpoint, it looks like the Silicon Valley Bank is really what triggered what was going on today. I think the algos grabbed into this story and they really rolled it. So we'll see what comes out. Maybe these employment numbers will start to soften a little bit. Who knows? Volatility will be maxed out tomorrow, though. Expect that. So just looking at a couple of comments here. Yeah, I think, Pamela, you're talking about these, I think these outside bars here. Yeah, you don't, what isn't a reversal, like if you get an outside bar and it closed lower and you're at a low, those typically about 70% of the time end up to be the low print. And this was a thing, something else that I'll mention here before we move on tonight is one of the things that happens when you get a day like we saw today. There's potential capitulation here from that standpoint. Even though the database is puking out, what did I say, 2,664 symbols tomorrow. It's just zeroing everything out. It oftentimes when you see stories like this and you get this stuff, it's just right at the bottom. So we'll have to see. I think the next couple of days are going to be really important, especially tomorrow being a Friday close, to see how everything sets up. I think that the patterns are going to reveal themselves much quicker than you think. And I think this is interesting here, because if there was, if there's going to be a systemic breach in the regional banks, I'm not sure. Maybe everybody's buying safety money, and that's why the Treasury's rallied. Maybe that's what's going on here, a flight to safety kind of bid that came in. It does look to here, just looking at the futures here, and I'm looking at the algos on the futures. They've been much better indicator the last couple of days. I'd say last week or so when I started starting to cover these, as it looks like today is going to be the peak value. So we'll probably see some stabilization, probably see the 10-year come back into 393 to 394 maybe. I don't think they continue down that 21 period moving average if I go and put the yields back up here real quick. If I put the yields up here, you'll see we're right on that 385 is low target one. We also have the moving averages here. We're looking at the 21 at 388. That's the number I was talking about. So we should hold in here, probably print back into 92. Well, like I said, I mean, it's a flip a coin kind of day just because of the news we have coming out pre-open. So it's going to be pretty exciting. A little early in the morning to have popcorn, but you might want to have it ready to go early when the market's open in the morning. Yeah, so I just see, Final, you've been around a long time. I'll just answer a question here. So I'd be curious to see how Wavetech directs over the next several trading days. When you get a blowout of the database and we get to under sub 22%, it can take between 8 and 10 days for all these patterns to recycle again. So there's basically a gap. You get the liquidation, and then you have a consolidation. If prices continue to decline, then we can go further into lower numbers on the bullish percents, or it can actually just stabilize here and just kind of rotate and then come back in. But it's going to take minimum 5 to 8 sessions to get any kind of configuration. So what has to happen, it's not about just values changing. Once you see a decline like what we've seen, especially when we saw, if you remember, we've been straight down on the bullish percent since we hit 80%. It just went down, went down to 70, 60, 50, and here we are at 19. It's just been straight down. There's been a couple little bounces that look like maybe there was some stabilization in the database, but never got there. So I think the interest rates are going to stabilize here. This 388 is probably it for the 10-year, and maybe it prints 385, but I don't think much to that. But there does look like that pivot number I've been talking about on the futures puts us around 380, somewhere between 385 and 380 range is where that's going to print. If we get up, if the futures rally to that point, that's where yields will drop down into that range. But it does look to me, Matter of fact, let's just put the weekly chart in here. I look at the weeklies. We still have some stability here on the weeklies. Just getting some values here real quick. 370 is major support, but what we're seeing is that everything is flattening out here. And I didn't think we'd see, like, we printed a 409 intraday, 4.09% on the 10. And then we've been backing off ever since. That was kind of a climactic day. And now I think we're heading back to the 380s, maybe 375. I don't know that we see 370, but that's going to be, I think, some of the action that might change the equity situation a little bit. So it's too early to call. Like I said, on Sunday night, I'll have this thing dialed in. It was way too much to kind of look at the close today and try to figure out what's going to come in next. So we'll go through crude oil next. Crude had those upper band up there. It was printing. This is a weekly chart. We're right back into the range. It's back and forth. The algos are suggesting we could trade back in toward the bottom of this range down towards 70. We'll say right around 70, 73 to around 70, maybe 71 on the downside. We've got, we do have, this week we got these new upward objectives that I was talking about. We have the downward sloping 40, which tells us there's a cap on this market right now, which is going to put us, the cap is at around 86. We're not going to get anywhere close to that now, but it looks like 73, 71 should be where we go. But if you look at this mess, we've been in the same range for really going back to October, and we're just not able to, there's no real movement here. So this won't be the cause of new inflationary pressures. Will not be crude oil at this stage anyway. All right, so we'll cover gold. Actually got a little bit of a bid, rallied right back in the range. It looked like we're going to get some downward numbers. This is consolidating as well. We need to get above the 21. The algos are suggesting that there's still more sideways to down. So there's some consolidation to happen here, even though we caught a little bit of a bid. I think this was part, maybe exactly what we're seeing is this flight to quality. People are just running to some safe location, whether it's treasuries or gold. That may be the whole bid that happened at that level. I don't see anything material going on here as far as all that goes. Let's go to the weekly because I don't think there's really anything here. I'll cover this more on Sunday, but yeah, the weekly chart is significant. You got PPM1 up, PPM2 up at a 0.548, and that the 21 period moving average is 1812.40. We actually printed down almost, I think, exactly to that. Yeah, 1813.40, and then printing back to 32 handle. So yeah, I just expect us, and I talked about this probably 2 or 3 weeks ago, that we're going to get stuck between the 21 and 10. And right now, those values are, and this is a weekly chart. Okay, so that's 1875 and the 21's 1812. So we're just going to be randomly moving in those levels. And I think we're going to have a hard time getting over probably 1845, 1850 in this pattern. All right, so here's weekly Bitcoin. I've been talking about this potential coming down into these ranges here. We did get down to 19,810. Last is right at 20,000. Came right to that 21. This is the weekly, right down into the 21-week moving average, and let's bring that up. 19,713 is the 21, and we're looking at right now the low 19,810. So we're coming pretty close to hitting that. The algos are suggesting, I've been talking about this, the weekly algos are still suggesting we're rolling over here, and it looks like I thought we'd test these levels, which we are. It looks like we should hold these levels at this point around this 19.8. I was talking about 20,500. This was the extreme at 19.8. We went through everything. So if you remember the 21 last night, we'll just get those values out real quick here. The 21 is yesterday was at 20,000. I'm sorry, it's the 40. I keep calling it 21. 20,632, and then the 21 was 19,698. We come to that was last week. Now we're looking at this week. We're looking at the numbers of 21 is 19,715, and then the 40 was at 20,386. So that was kind of the target range here. So we're trading in a target range. Does it hold? It doesn't look like it. It looks like it can roll even more. We're looking at PPM1 rolling. The only thing that's reasonable here is that this red line, or the 21 period moving average, looks like it should supply some support. So what the best thing to hope for here in Bitcoin would be that we would trade between the 21 and the 10, which is 19,700, rounding numbers off, to 21, we'll call it 22,000. That's going to be your trading range. If it breaks through the 19.7, then there's no objectives on the downside. So we could run, we could possibly run all the way down into maybe into around 18.5 with the extreme into 15,000. I don't think that's what happens. I do think we hold along these levels right here. Okay, folks, that'll do it for tonight. Hopefully it made some sense. It was a crazy day. I think like I said, I will do my best. If I can get maybe toward the end of the close tomorrow, I might be able to free up some time, maybe come live and go there. I'm just looking at a story that just came across. JP Morgan strategist warns risk of unknown unknowns. I actually saw this guy. I just happened to have it on. Highest since global financial crisis. That stinks of a low, folks. I actually saw that guy saying that, and I've told you before, I grew up in the wirehouses, basically the big banks, and these guys are almost always wrong. So, yeah, so I love that. That was a Donald Rumsfeld comment going back into the Gulf War. The first one is that there's unknown unknowns. That used to be a joke around our members of the staff at my company, especially back in 2010, 11. We say, but wait, there's unknown unknowns. So it's pretty funny. But yes, should be an interesting day, folks. Like I said, we have an STX buy signal working on a daily on the S&P, basically on all the indexes. We should rebound, come back in. They're looking at right now, ESs are down at 20 handles right now. So we definitely are seeing some pressure across the board here. So it's going to be interesting. And like I said, the algos on the hourly are suggesting some recovery, but there's tons and tons of resistance overhead. So it's going to be an interesting day. So good luck. Be safe out there in the trading, and I'll see you on Sunday night and possibly maybe the last hour tomorrow, depending on what's going on. I've got a bunch of stuff going on. I'm not sure I'm going to be able to show up, but I will if I can. I'll send out a tweet as soon as I know I'm going to be able to do that, but maybe the last hour trading, depending on what's going on tomorrow. Anyway, folks, thanks again for watching, being part of the channel. Thank you for the Smurfs. You guys are doing a great job. I don't even look for any of the trolls out there. You folks are doing a great job. I really appreciate it. So thanks again. Crazy markets, folks, right? You know, there were some unknowns that happened today. And I think, like I said, I think this Silicon Valley Bank thing is probably a one-off. It's probably related to crypto. There's certainly issues in the regional banks that could crop up, but I don't believe it's systemic yet. And I'm going to dig into this pretty good. So have a great day trading tomorrow. Good luck with all the volatility. We'll see you on Sunday night.